Association. Thank you so much once again. Now, we move on to the next session, which again to me is personally very fascinating. This is on the rise of digital assets and applications of systematic strategies in this space. Supremely fascinating for a couple of reasons, but I want to invite Mridul on the stage, Mridul Gupta. Mridul is the founding partner and former COO of CoinDCX. I can't think of many better people to comment on the state of virtual assets. Especially for me, like I said, personally, coming from this world of technical analysis, price is the only tool you have to make sense of digital assets. And I remember a conversation a couple of years ago that I had with someone from the Virtual Assets Regulatory Authority in Dubai, in the UAE, about the importance that many jurisdictions are placing on not necessarily stifling, but appropriately protecting against market risk in the virtual asset space. So with that forward, over to you, Mridul.
Hey, am I audible? Cool, perfect, thank you. So we are stepping into crypto, which is slightly similar, but slightly different from the world of financial services we have been talking about so far in the evening. So let's just flex our muscles. It's legal in India. It's not regulated, but it's legal. This is the biggest question we get to hear. And I just want to put that out up front. The way this session has been structured is into three pieces, largely why crypto, number one. Number two, what are the biggest apprehensions about crypto and about systematic trading in India. And number three, about CoinDCX. We can keep the CoinDCX session short. I would want to talk about more crypto, more Bitcoin, more systematic trading. So with this, let me step into the session. The objective is to really bridge the gap when it comes to trading in the traditional financial services markets, be it equities, commodities, interest rates, and when it comes to trading in crypto. Fundamentally, both of these asset classes are very similar. There are differences, of course. I don't know how many of you would have traded in gold or in oil. How many of you, if there's a show of hands available, are commodities traders of any sort? Great. So, like one fundamental difference between an equities trading and commodities trading is how just global the market is. Every phenomena, every macro event, every potential geopolitical conflict impacts commodities market, maybe not so much on the equities market, and that's where we also see differences in equities and crypto. But at a very fundamental nature, the candlesticks, the order books, the price predictions, the price charts, the price to earnings ratio, it's very similar, right? So that's where equities and crypto end up becoming very, very similar. Every technology goes through an adoption curve, and if you look at this curve, we have probably this was in 2010s to 20s where we had crypto in the innovators to early adopters curve, and now we are witnessing crypto in the early majority. Now, I'll give you some stats on why we believe it is early majority. We also operate a company in UAE under a proper broker-dealer license under VARA. In UAE as a market, 15% of the population holds crypto. A lot of real estate transactions happen in stablecoins. A lot of savings happen on chain. And government is now coming up with norms around putting real estate and around putting real world assets on chain, right? If you talk about US, crypto and Bitcoin adoption and made in America, the crypto will be made in America was a big narrative of the Trump regime. And they have been successfully executing it over the past 6 months. So if you look at globally, countries like US, Korea, Japan, Singapore, Australia, Middle East, Europe, most of these countries have come up with some form of regulations, some form of license, some form of guardrails around crypto. India is slightly lagging behind. India, I would say, would be in the early adopter phase. There is no license, there is registration under FIU. A lot of people buy Bitcoin, buy a lot of meme coins in anticipation of it going up without understanding the core fundamentals of it. A lot of quant traders, institutional traders are beginning to set up shops in India and in UAE to trade in crypto, but they're still apprehensive of the taxation, of the legislation, of the regulation, etc. And this is one area where we would love to go deeper. You can catch our team offhand in the session later to understand more deeply about how are we solving for it. What what are the proof points of crypto going mainstream? So if you look at the Bitcoin ETF, this was the second most popular, second fastest growing ETF after the gold's ETF, right? So we have seen Bitcoin ETF being launched by every major player from BlackRock, Grayscales to all the big banks, etc. We also see Bitcoin being adopted on treasuries of at least 100 global public companies. And these companies are contemplating more and more to put more reserves in Bitcoin for future investments and for future capital gains. And we also see more than $100 billion of AUM in Bitcoin ETFs, which is, not a small number by any means, even in the market which is just beginning to get started, right? So if you look at some of the predictions which have happened today and yesterday, some of the big bank CEOs are saying that Bitcoin has a potential to even go ahead of gold in market capitalization, primarily because it's digital in nature and there's a lot of demand supply matching which is happening digitally, and also because derivatives market has been created around Bitcoin super fast. Also, Bitcoin and crypto from an investment perspective is just one, but if you look at the stable coins, they have disrupted how the money gets exchanged, right? I think if you look at the world and if you look at how we operated in the pre-agriculture era to how we operate in today's era, the human civilization only moved towards efficiency. And stable coins are the most efficient way to move capital. Be it cross-border, be it peer-to-peer, be it peer-to-merchant, be it merchant-to-peer, be it peer-to-government, any sorts, right? And we have seen the big majors like Stripe, Robinhood announce their plans on launching stablecoin-based rails. We have seen plans of some of the biggest US banks launching their own stablecoins. So not just the investment and the long-term capital appreciation use cases, but some of the real-world applications around the money transfer, money movement, the actual financial services being built on crypto is also happening as we are witnessing today. It's starting with US, but India and Middle East and the larger APAC region is not falling behind. We are seeing those regions also emerge up very fast on some of these use cases. I'll skip this one and come back to this, but let me just show this one, right? So if you look at last 1 year of volatility around different asset classes, you look at gold, which is sitting somewhere at the top around 15%, and you look at Bitcoin, it is sitting at 75%, right? And it's 5 times that of gold, it's 4 times that of US stocks, it's 10 times or maybe 8 times that of the bonds market. And in our industry, volatility is a feature, it's not a bug. Right, so the more the volatility, the higher the chances of you being able to make money on the market swings up or down. Bitcoin is the most stable crypto. It has a market dominance of roughly around 55%. Other coins are slightly more volatile. You will see 20% price swings up and down. But the good part is that all of these price swings can be calibrated back to some of the fundamental actions, right? And this is the only industry in the world, like the only industry where any form of data and every form of data is available at the tip of your fingers. The currency transfers on-chain available. The sentiments around Twitter and Telegram groups available. The open interest on different exchanges available. Markets are being 24/7. If one exchange goes down, your capability to take funds onto different exchange and track the buying selling patterns there available, right? So all data is available on-chain, all data is available at the tip of your fingers. So it's the best market for building softwares, for building API-driven software trading, API-driven AI-based trading. And now we are already seeing a lot of global majors implementing AI-based trading practices in crypto. Let's talk about systematic trading advantages, right? So again, this goes back to why crypto is fundamentally more efficient than any other market out there. Number one, it's 24/7. It does not stop, right? It works every second, every day, every month, every year. You will be able to trade on the market. Number two, it's real-time settlement. As soon as the trade is done, you settle the trade, you receive the money in your account, you can take it out in a matter of seconds, and you can be happy about it. Number three, there is no lot size constraint. You can trade with as little as 1,000 rupees. You can do futures trade, you can do spot trade, you can do options trade, you can take leverages, you can build your bots on top of it, you can do everything. And last but not the least is sentiment trading, right? So if you look at any market, there is fundamental and then there is sentiments around the core asset class. Now, crypto fundamentals are very clear. Every data is available on chain. You can track it, you can measure it in real time and take actions on it. But so is the sentiment, right? So you're not, left to a earnings call happening in some part of the world to be able to take a call on the CEO's speech and make your trades go up or down. You can literally track the sentiment around the asset classes with the help of Twitter analysis, Telegram analysis. You can go to the communities on Discord and understand what is the new software being written on the crypto asset class, on the crypto tokens, and how is this being perceived by the community. So everything, as I said earlier, is programmable. Everything is measurable. Everything is available at the tip of your fingers. And all you need is just a pair of smart eyes and brains to write software on top of it and start trading. While there are advantages, there are certain challenges also, or I would say certain gaps in terms of understanding on how to build about our trading strategies in the market. But before even going to trading strategies, a lot of people have these questions. Number one question we have seen is regulatory uncertainty. There is no regulation in India. When will the regulation happen? Should I wait for that time to start trading? That is one prominent question. Second question is, what is the status of legality and taxation, right? So is it legal? And if it is legal, how is it taxed? So that I don't run my core business into trouble because of some exposure to crypto. And the third one is that the liquidity is so fragmented, I don't know how do I trade. I don't know how do I deposit INR. I don't know where do I deposit INR. I don't know what do I trade with that INR, etc., etc. Right? So to address these questions, number one, it's not regulated. We as a company operate in 3 regions: India, Dubai, and Bahrain. We have 2 licenses, one under Bahrain, one under Dubai, VARA as a regulator. But in India, it's not regulated. There's only a registration which is required to run a crypto company. But running a crypto company is very hard, right? So I would say that regulations are at least 2 to 3 years away, and the market is maturing very fast. So you can't wait for regulations to catch up and then you will start trading. You have to do it the other way around. You have to start trading today and regulations will eventually catch up. And that has been the fate of every new economy, every new asset class. Right? Second, on legality and taxation, it's perfectly legal. Supreme Court has a verdict on it. Crypto, any form of crypto owning, investing and trading is perfectly legal in India. Taxation, there's a slide on taxation we have, but largely there are guardrails around taxation which the government has announced. There is 1% TDS on every spot transaction. On derivatives, all of it is a business income. So you can show it in your returns as the business income. And third, on how to go about approaching depositing INR, trading with INR, etc. Right? So at CoinDCX, we have the most stable, seamless, and 24/7 INR rails. So you can deposit as low as 100 rupees to 100 crore rupees in a matter of few minutes, and you can start trading with that balance available to you on the app, on the API, and on the web interface. We also have aggregated liquidity across multiple exchanges. So you don't have to worry about which exchange to trade, which liquidity provider to trade on. We give you the best options, most liquid options on our exchange, and make sure that everything is available to you on the same interface, on the same platform. With that, let me maybe step into the world of taxation a little bit more. So if you look at spot taxation in India, we have taxation on profits, which is 30% flat, irrespective of how much have you made. 30% flat tax on spot profits only. But if you look at derivatives income is tagged under business income. And it's very similar to how you are paying your taxes in the FNO space in India. So you can pay your taxes on crypto derivatives in a very similar form. On spot, there is TDS on spot, 1% on every transaction. This is primary reason for the spot liquidity to be very low in India. But derivatives, there is no TDS, and the liquidity is amazing. Like, you will see tick by tick data and you'll be surprised at how many how many ticks are getting quoted, how fast the tick stream is moving, how much of depth is available in the market. Last one is the GST. We are an India compliant company. We pay GST on all the fees which we earn from you. So this 18% GST which we pay on all the fees, income generated from the users. I'll skip the CoinDCX one. I'll come to the systematic trading strategies. So we have typically seen 4-5 kind of strategies work out in the crypto markets. The first one is momentum trading. Typically around any macro event, any sentiment analysis, any potential big announcement, we see a lot of momentum trading happen. It typically starts with Bitcoin, and then the rally goes into altcoins, and we are seeing a very similar pattern happening right now. So Bitcoin peaked, it crossed $100,000, and now we are seeing altcoins peaking. So a lot of people put their bets on momentum trading. They take some leverage trades, 5x, 10x, and they put capital behind it to make capital gains out of it. We see a lot of cross-exchange arbitrage. Now, in India, there are 2 exchanges, BSE and NSE. But in crypto, in spot alone, there are at least 100 exchanges globally. And you can imagine the price to be converging across all exchanges on Bitcoin, on Ethereum, on Solana, on all the other assets. But because there is this price convergence happening, there are opportunities available to move your money in crypto fast enough between exchanges and leverage the price convergence timeline gap to be able to make some money. We see market making, of course. So one traditional form of market making we have seen in the market is a lot of people make markets on local exchanges and get liquidity from global exchanges. So again, a very systematic trading strategy which gets applied in crypto. All the world's biggest market maker, be it Jump, Tower, Quant, Graviton, all of them are active in crypto, right? Everybody is actively market making on crypto asset class. And then we see scalping and delta neutral strategies. Scalping is typically, leveraging small price movements here and there, placing slightly higher leverages trade to be able to make money out more frequently. Small money, but when you do it more frequently, it leads to big money. And delta neutral. So, for example, crypto has futures and crypto has spot. So how do you do reverse trades on crypto futures and on crypto spot and earn some interest out of the capital which you are putting? Why we believe the future is exciting is not just because of all the trading activities, but because of fundamental new developments happening in crypto, which are leading to more and more adoption, more and more use cases, and more regulation, right? So when we see more and more adoption, we are seeing in every developed market, Bitcoin ownership or crypto ownership is getting into double-digit percentage numbers, right? So we have seen it happen in US, we have seen it happen in UAE, now we are seeing it happen in UK, we are seeing it happening in Europe, we are seeing it happening in Canada, we are seeing it happen in Singapore, etc., right? So crypto adoption in developed market is beginning to happen with Bitcoin first, and it's already showing very healthy signs and is crossing double-digit percentages. In underdeveloped markets like India, Nigeria, South Africa, Ghana, Egypt, right? There, the crypto adoption is happening with stable coins, right? If you go to Delhi offline trading market, you will see a lot of traders accepting USDT-based payments when it comes to import-export. If you go to Ghana and if you will get the trader in UAE, he will be doing gold trading on USDT, right? So in underdeveloped markets, the crypto adoption is happening on stable coins. In developed markets, it's happening with Bitcoin. We are seeing a lot of payments and remittance-based use cases around stable coins already. There are licenses asking for startups to build on top of the stablecoin infrastructure in US and in UAE, and they are creating new demand and new corridors for crypto adoption. And we are also seeing a lot of firms come up with algorithms, APIs, and AI-based tools to create smarter strategies, smarter bots, smarter prediction, smarter sentiment analysis, which helps quant traders. I was meeting a trader in UAE, and he said that he gives you a toolkit with which, if you just, instead of buying a Bitcoin, if you just use his toolkit, he will give you 1% better price every time you're buying Bitcoin. and think of that 1% accumulating over time, right? It results into a big number. We were talking to a startup which was leading to, with just AI prompts, you could write strategy bots in a matter of seconds and deploy those strategy bots live on any exchange, any market in crypto, right? So again, signs of very, very strong ecosystem which is helping crypto API trading grow very fast. I'll just very quickly, in 1 minute, talk about CoinDCX. We do around 100,000 crores of monthly trading volumes, have close to 16 million registered users, have been valued at $2 billion plus from the leading financial investors in the country. Almost all big hedge funds, venture capitals, and crypto players have invested in us. Talking about Pantera, which is the largest crypto fund, SteadView, which is the largest hedge fund in India, and Coinbase, which is the largest publicly traded crypto company in the world. We have a full suite of products. Our team is there in the first stall. We'll be able to take you through the entire suite and get you customized offerings for your use cases. And just quickly talking about crypto options. So we talked about futures and perpetuals, but we are also launching crypto options. This has been one big demand coming from the user base which has been active on equities, that you don't have crypto options. This product will be live by June end with us. You can start trading options in Bitcoin and Ethereum with INR as a deposit currency and as the margin currency. And that's about it.